Hey guys, welcome back on the channel. So this was my previous video, yesterday's video, how to earn 1% in 2 weeks while farming Bitcoin LPs. Today I'm going to reply to this comment from Christopher. If you're watching, thanks a lot for dropping a comment. It really helps me to understand the things that the viewers are considering and thinking when watching the videos. So let me reply to this. Do you think supplying small liquidity works, or is this only for example purposes? Just asking, since some users deposit $500 and some thousands. Curious on your thoughts on this. So pretty much this is for example purposes, like you said. And the thing is that most people come into crypto with the mentality, a short-term mentality of just having these 1000% returns, which there's going to happen. Yeah, crypto is unlike anything else on earth when it comes to transforming wealth like that. But only a small minority of people will experience that. And I think most people, knowing of those events, they jump into crypto thinking they will experience the same, and they get wrecked. So the whole point of this Banking on Bitcoin series is just to show you that even with a conservative approach, you can get results which are light years ahead of what traditional finance offers. In this case, I'm showing you 1% in 2 weeks. It can be higher than that. So far, this is what the pools have been averaging, but it can be higher than that, especially, of course, if you go with wider ranges. Let me load this DEX screener chart once again. So this is Bitcoin's chart, Bitcoin USDT liquidity pool. And this leads me to the point when I decided to come up with this series, which was pretty much everyone is too caught up on APRs. They're trying to get 1,000, 100% APRs. That will work only in the short term because volatility is the name of the game in crypto. So there were a couple of things that played into this idea that I got of showing how to deposit into Bitcoin liquidity pools. And the number one is, of course, Bitcoin runs the show. Bitcoin goes up, everything goes up. It goes down, everything goes down. Sometimes everything goes down while Bitcoin is chopping sideways, which is pretty much what has been happening for the past week. So crypto does work, it can work, but you gotta know what you're doing. And also, depositing $100 or 20 or 500, it doesn't really matter. What matters are the percentages. And also, of course, depositing into liquidity pools gives you total control. I mean, you can withdraw whenever you want. You are not locked in. And that's also a huge upgrade from traditional finance when you subscribe to those plans. I mean, your capital is locked there. Sometimes they pay you interest in advance, but it is still locked there for 1 year or something like that. And since I think crypto is the future, I'm just showing people how they can run their own crypto piggy bank with a liquidity pool that gives them exposure to Bitcoin, bank on it, which means also stacking sats. If you don't know what stacking sats is, sats are just a small percentage, a fraction of Bitcoin. And if you look at this pool, right now it has 26 cents in fees, and virtually half of this are just already Bitcoin. Of course, this is not native Bitcoin, and I know many people have issues with it, but bear with me on this one, okay? So at any point in time, I can come and collect this. I'm already stacking sats. My $20 deposit is 24/7 stacking sats. Plus, if I come here, collect, I can turn this USDT into more Bitcoin whenever I want. I can also collect and deposit into the pool and effectively compound, but actually this term, banking on Bitcoin, is just as simple as look at your liquidity pool as your personal piggy bank. You deposit fiat, so let's say you have a budget of investing that you can do. You don't want to manage. This is going to be virtually passive. Pretty much depends on how wide your range is. This range, it's not all that wide, to be honest. This is 25% overall range. So far, Bitcoin's price has been trading within this range for, so let me go ahead and check that here. So far, this has been 183 days. That is how long the price has been within this range. Now, we are currently at the point that it seems that Bitcoin is going to fall below that range. If that is the case, what I would do is I would lower my downside range, probably also my upside range, because I'm not depositing all that much. This is a small deposit, but as time goes by and my deposit increases, if I am depositing $20 every day, it can compound really fast. That's like $600 a month that I'm compounding into this pool. But as soon as the price drops below my downside range, that is an optimal way for you to buy in. And you are just DCAing. You buy in, you readjust your range, you lower it. In this case, where would I lower the range? So I see there's somewhat of a support here at 95. I think if you look at just numbers, there are psychological barriers in all of them. There was a psychological barrier on 100K price for Bitcoin. We just broke through that past May. So you don't really need to just study charts and all of that. I mean, I believe whole markets are being manipulated, and they will consistently be more and more manipulated as time goes by, as entities like BlackRock buy into Bitcoin. There are people who are getting liquidated because they over leverage themselves, and doing this is a way for you to just avoid leveraging altogether. And it is something for people who have patience and they want to play the long run. I could easily go into a Bitcoin liquidity pool, deploy a very narrow range that gets me triple digits APR, but how long it will last? A couple days, if that. It pretty much depends on the market sentiment. But if the price of Bitcoin keeps doing this in and out, above and below of 100K, since my downside range is at this point, probably I'm going to lower it to 95K, for example, to 90K, to 85. And the same thing with my upside range, because it's easier for the price to drop than to bounce back up. There's always going to be more resistance, more money needed to buy Bitcoin and drive the price up versus seeing the price falling down. You already can see that here on this recent past. There's these red candles, especially the one here in October the 10th, a manipulated liquidation event. You can see that this candle here, let me go with 1 hour candle. So let's zoom in. So this was the liquidation event on October the 10th, okay? Look at how long it took for it to drop. We're talking about 4 or 5 hours for this price to drop 10%. If we go further in to the bottom of it, 17 hours for the price to drop around 10%. But if you look at the other side, the reverse of the medal, for example, let me zoom out once again. For the price to go up, this rally that started at 28th of September and it finished here at all-time high, 14% price appreciation. It took 8 days, 1 whole week of market activity and money coming in to buy Bitcoin and drive the price up. So it's always going to be easier for the price to go down than going up when you look at the money needed to move the price, right? And understanding that, I would say if you are more of a conservative type of person trying to bank on Bitcoin, just let that reflect in the ranges that you set. For example, if you're entering right now a Bitcoin liquidity pool, set an upside range of 110 or 105, and on the downside, just have a wider range even than that. So for example, if you go with 105 on the upside, that's roughly 5%, then go with at least, I would say 15 at least. How much Bitcoin would be 15%? So something like this, 85K on the downside. Because although it's very important to catch these green candles, these upside rallies, it's going to take more time for that to happen. And when we see those reversals start to build up, it gives us enough time to just address that and readjust the position. So this one was a 10% rally overall that took overall 10 days. But still, if you have the time and if you go into the chart and look at it, you will see that it's much easier for the price to drop than compared with those rallies on the way up. So just understand all of that, set a wide enough range that you don't have to manage, because I don't know about you, but I don't want to be sitting at the front of a computer all day, setting ranges, closing positions, opening positions, and I also don't want to set up automated positions, because after all, in the end, that will cost you in the shape of fees. And not only that, you will lock in permanent loss. So I think in the long run, it's way better for you to start your own piggy bank with Bitcoin, bank on Bitcoin, set a wide enough range, at the very least 20%. I wouldn't shy away from 50%. I show you how to earn with a liquidity pool 1% in 2 weeks. If you go and talk with someone who doesn't know anything about crypto and they're into traditional finance and say, hey, I can get 1% in 2 weeks, they think you're running a scam or something. Banks, traditional finance, they will pay you 1% in 1 year, not in 2 weeks. And actually that is the takeaway for the video. It ain't much, but it will build up over time, especially if you consistently deposit into the pool. Take some fiat, invest it consistently, turn it into Bitcoin. At the same time, you are stacking sats, like I said, because you will be eventually earning fees. And at some point, you will have enough of a bag where you potentially can finance yourself just with the fees, but you have to start somewhere. And most of the people start with liquidity pools the same way they go into crypto, which is short-term mindset. They deposit their whole bag in one go, and I don't think that's optimal. I think that's where most people get it wrong. You gotta go with wide ranges, deposit consistently if you don't have the funds, because that's one of the biggest issues also with people not seeing results on liquidity pools. They deposit too much with a narrow range, it goes out of range, they see the value going down and they think it doesn't work. Well, it doesn't work because you're playing it wrong. You gotta be working for the long run. Build your bag over time, stay humble, stack sats, and I'm not gonna sugarcoat you. We are going to see ups and downs. I mean, look at the past. There have been bear markets and we will see another bear market. I know there's people who don't think bear markets will come ever again because now institutions are buying into Bitcoin. I beg to differ, and I think it's better to have that mindset that bear markets will come back, because if not, again, you'll be frustrated. If we enter a bear market, which I think we will, you will think, okay, I'm just losing money with this Bitcoin thing, and then you will miss out on the future bull run. It just works like that. So for example, practically, what does this mean? If you come today and you deposit 10,000, 100,000 into this range, and then the market starts to turn and we enter a bear market and everything goes down, let's say Bitcoin goes down to 60K, and now you're 40% down on your deposit. But if instead you are DCAing in and depositing consistently over time, that's the takeaway from this Banking on Bitcoin series, guys. Consistently DCAing in over time to a Bitcoin liquidity pool when the tides turn and we see a different momentum and we enter another bull run, or not necessarily another bull run, but there's always going to be volatility. So for example, this is from past October. From October up to December, a couple months went by, we had 64% increase. If you are able to build your bag into a Bitcoin liquidity pool, so you're DCAing in, price is going down, you're not stressing, you still keep DCAing, and then the tides turn, you probably won't even need to wait for this 64% to see your position breaking even. But that's it, guys. That's the takeaway point. 1% in 2 weeks might not seem all that much, but actually that's not the end game. The end game is in the long run. Build your position over time, compound. If it goes out of range, don't stress it. Widen up your ranges or readjust them altogether, but deposit some more. Because after all, it's Bitcoin. If you don't believe in it, you shouldn't be in crypto. Pretty much that's it, guys. So if you have any questions, let me know in the comments. Thanks a lot to Christopher for the comment. And actually, there was then Andrev who said, I think it's about percentage. And that's pretty much spot on. That's my whole point here. It's pretty much percentage and playing the long run. That's why I named this Banking on Bitcoin. If you're new to all of this, I did already plenty of videos on yield farming, but if you have any questions, let me know in the comments. I'll get back to you. Maybe I'll come up with another video explaining all of that, because if there's one person having this type of questions, I know there's plenty others who might be thinking the same or wondering the same. And my goal with this channel is just to help people adopt crypto. So picture this, even if institutions would not be into crypto and buying in Bitcoin, we the people, we could have this financial system which works 24/7. We don't need to rely on banks anymore. Most people are just normies, but right now, if we would decide, everyone who knows about Bitcoin, if we would decide to just forget about banks, the way that Bitcoin works, we could have already our own financial system put in place and provide services to one another using Bitcoin as a means of payment, for example. And there's other crypto, not just Bitcoin, but there's other crypto. There's Litecoin, etc., etc. But I believe you get the idea, right? If not, let me know, drop a comment, I'll get back to you. And I hope you took value from the video, guys. If you did, and if you want to explore crypto, learn more about it, you know the drill, like and subscribe for more of this type of content. I'm going to wrap this one up. Thank you for watching, take care, keep exploring crypto, guys. I'll see you at the next one.